Hi guys, this is the market update for the first week of March. S&P 500 moved like 2% up this week, like around 40 points. It went actually a little bit above small and 20. As I said on Wednesday, I started building up my short position. Well, it's okay. I mean, 20 points lost is not a big deal at this point. You know, I went very light. But I was not disciplined actually. I was supposed to wait for this market to move, to have a strong move down, then to put that. But this is a high risk, high reward situation. Okay, it's much riskier here actually at around the 2000 than would be, you know, on the way down like 1940, 1900. But of course it's better to short at a higher level than on smaller ones, lower ones. So the reason I say that, because I expected somewhere in the area of 1980 to stop this move up. Okay, so I was a little bit biased in here. I told you it is possible to go a little bit over there, so it's no big deal. But the thing is, we need to see the move down to have a confirmation that this is the last, you know, leg up before the beginning of the bear market. Let me show you 5 minutes chart. Okay, show you how the things were this week. So this was Monday, move up, pretty much a little bit of reversal day, then went down to 1932. On Tuesday, however, we have a huge move up, like 40%, 40 points on S&P 500. You know, started probably somewhere in here or something. Okay, and went around 1980, where I expected. The next day, Wednesday, when I made my call, you know, I see this a lot of indecision. So touched that point, and I saw pretty big moves ups and down for intraday. Okay, and I decided to go a little bit short. However, by the end of the day, actually it ended up in a very high note, establishing a high for the day. Next day, the same scenario. In the morning went down, you know, and again by the end of the day it made the highest, was the highest level for that day. And on Friday, pretty much the same scenario, moved down in here, and however it didn't end up in the highest level somewhere, which was like 2008, and we're now pretty much at 2000. Okay, so didn't move up too much overall from the point. I mean, 20 points is no big deal. I'll show you why I'm not particularly concerned. First, because it's just a small position, doesn't matter anyway. And second, this happened before, so it's not, I told you, small 120, it's an arbitrary, it's very close to what's supposed to be, but it's made up by myself. So in here, I cannot see, of course, the small 120 is too short, but look at the moving averages. So we had the same pretty much scenario. Bearish crossover in here somewhere. Okay, then I move up, and actually went above this. So somewhere in here, like 3091 probably was the small 120, and just above them was the two moving average. So went actually above both moving averages. So if you want, this was actually a huge rally in here as well, but I think a little bit higher than we see today. So let's have a look at this, see how big it is. Okay, but then again I need to move to so it was a move up from around 1275 to 1425, so 150 points, and now it's like 200 points we saw the movement on the upside. However, it's not the same. 200 points percentage-wise is not the same a move of 200 points from 1275 to say 1425 than from 1800 to 2000. Okay, it's not the same percentage wise. So to get a real idea how percentage wise, I need to go to logarithmic scale. Okay, this will move. So let's move again. So okay, so this is now we compare apples to apples. Okay, so let's go to the present day. Oops, let me show you. I lost it. Give me a second. Okay, is this in here? I just want to compare the magnitude of the move on the upside right now with what we saw in 2008. So if I put it here to actually, as I told you, actually it could move a little bit up to 2061 if you're gonna have the same magnitude of the movement. So doesn't really matter. It never happened exactly the same, but overall it should say the same. So I think the most they can do, go to this small downtrend line somewhere in here, 2070. If it goes above that, obviously we need to think about again the bearish scenario, but I don't think so. Once this you see this crossover on this particular moving averages, it's no way back. Okay, so let's have a look a little bit at the again. I want to show you. Let's go to monthly and let's add MACD. So MACD, it's a very fast. It's much faster than this moving averages in particular. Okay, so let me, since I have this small whipsaw in here, as I mentioned before, I need to adjust a little bit this. Let me see. Okay, alright, this go to 38. I already measured this, so I know exactly where to go. It's like 30%. I forgot the percentage, but anyway, this need to be valid. So I got rid of this. Okay, let me modify this moving averages as well, so you know what I'm talking about. So 120. So this is monthly compared to weekly. So weekly have 5 trading days. Monthly, let's say, have 20 trading days, so 4 times more. Obviously, months are actually 30 and 31, most of them except the February, but let's say it's just straight for 4 weeks. Okay, so we divide it by 4, and this will be like 30, I guess, right? I move, and this should be like, it should be like 15. I can make 14 because it's a little bit more than 14 and 7. Okay, and now I have I can see also the moving average. I can see everything. So it's slightly different, this image, from what I usually show you on the weekly chart. You know, this is monthly chart again, but they're pretty close. So this can go to supposed to be 7.5 to 15, I guess. So what I want to show you, look over here, even corrected for this, which is in the favor of the bulls. Actually, I'll show you this. So we're really the crossover, the sell signal was like here. Okay, it was in September sometimes. Now we're here. Okay, this is already. It's a while since the sell signal and MACD happened on the monthly chart. Okay, so we're here. Let's look something like this in here. Let's say about the same magnitude of so the same magnitude will bring us pretty much as I showed you before, somewhere in here. Somewhere we had a moving crossover. We had the bearish crossover. We had a little bit of penetration above the small 120, then obviously was a move down. Let's see if you can get a move down. Okay, a serious move down. So it's kind of similar in here. Okay, if you look at the other part on the bullish side. Okay, so let's forget about this right now. Let's go directly in here. Okay, I'm gonna close this. So where is the signal, the buy signal? Somewhere in here, okay? Somewhere in here. It moved below small 120, then move up again. So immediately after the crossover, always so it's a huge movement on the upward, which determine this moving averages across. Then most of the time, after such an intense move up, you see a little bit of moving down. However, you don't see the moving averages crossing back again. That would be really bad. Okay, and eventually market moves above the small 120, and that's it. After that, it's a free run. There not be there's a little bit of challenge here, a little bit of challenge here, but nothing serious happens. So let's see. So here, yeah, you can notice a little bit of this crossover, you know, again, move about small 120, but it's nothing, unless I see this crossing up again, giving a bullish crossover, it's nothing to fear at this point, okay? So, let's see, if I see a strong move down, that's definitely the go with the bulk of the short side. Okay, so usually I go for SDS. So SDS is the inverse. Let's go a little bit more quickly. So SDS is the WX inverse SPY. Okay, I also have QID for Nasdaq. If you want to short Nasdaq again, they're hammered since 2009. Okay, now it may be the time to buy them. So that's how I go. I don't bother too much with shorting individual stocks. No way. I mean, shorting individual stocks, as I told you, this is very dangerous. I'm not going to do it. I only go with the inverse ETFs, which is pretty much like a normal stock. Okay, so let's move this. Since I'm on a weekly, let's go back to my moving averages, 30 and 60 weeks. Okay, with 120. I want to show you I'll show you, let me show you the Dow Jones. Dow Jones, which is the most bearish, okay, again, is the most bearish because, look, it's still below actually the mountain. It didn't manage to do this, and the bearish crossover is more obvious than on the other two major indexes. So S&P 500 is somewhere in between. If you look at Nasdaq actually it's much more above the 120, a little bit more than S&P 500. It's above the downtrend line, okay, but also there is no bearish crossover here. They're touching, but no bearish crossover. So that usually happen, you know. Want to be ahead of that. That's why most of the time either Nasdaq or Dow are faster or than the S&P 500. S&P 500 always falls in the middle. That's why I trust it most. Okay. Again, let's look now at the metals. Actually had oil. Obviously, went up like 10% this week. But metals still enjoy X. Okay. This went crazy, like 55% on the upside this week. MT, ArcelorMittal again, big guys again, 55%. I calculated. There's AKS again, still pretty much the same. All of them were like 50 to 60% on the upside. Huge move. Gold, on the other hand, it moved up a little bit. It's like 2%, which is pretty good for gold. Okay, as I told you, this looks very promising. Okay, look, this moving averages was actually for the first time in years we see it, like in 3 years, almost 3 years actually, not almost. Okay, we see a move about this moving averages. And also I told you about this trading channel, downtrend channel. It's a big deal when it moves up, out of either way, or down or up. This is a significant event. Okay, so I expect gold to move further up. Okay, silver, I mentioned silver. It's a little bit more bearish. Okay, it's still in the trading range, in the trading channel. Okay, obviously look, and also small on 20, it's pretty much far away. So I think people prefer gold to silver, to be honest. Okay, that's, I don't want to speculate why or whatever, but they'll move up. Both of them will move up or move down, but not to the same percentage. So if you want now to take advantage of this, I think you'll be better off with gold than with silver. So gold, at least gold was up. Year to date is like 20% up. So this is a huge move. Okay, so I'm stopping here, and if something really interesting will happen this week, like a strong move down, for example, I'm gonna make another video during the week. If not, I'll see you next Friday. Okay, bye guys, be safe.